Yeah, so we have Nikhil here today, who's a founder of Equity Intrinsic Value Equity Advisors. He's a student of value investing and comes with a 9 years plus experience in the market. He has obtained his MTech from IIT Madras. He's also worked with many reputed oil and gas EPC companies like L&T and Worley, and thus has industry experience in construction, infra, steel, oil, and marine related businesses. He considers himself lucky to have worked in and around these cyclical companies to know how they work and how value can be created around them for investors. His strength is to find well growing companies at wonderful valuations. Nikhil believes if you can cancel your losses, extraordinary CAGRs are the natural and only outcome. His thought process on value investing can be summarized in his motto: buying peace is chaos in value investing. That's a nice motto, Nikhil. So some of us, ideas which has become multi-baggers in the past are Tata Motors, Tata Power, British Speciality, Trident, FM Industries, GNA Axle, Arvind Limited, and many more names. So he's a champion in cyclical stocks. So hi, welcome Nikhil. Great to have you here.
Thank you for the kind introduction, Ashutosh.
Yeah.
Uh, and I have seen that you are also interested in cyclical, so I think this discussion
Yeah,
is
this is
going to
gonna
be
be a yeah,
very interesting.
absolutely, absolutely,
Yeah,
yes.
yeah. So that's great. So
So Nikhil, before we start, how did you get into cyclicals? Like, I want to understand your backstory.
so basically, I'm a value investor, and value investing and cyclical investing are not that different. Okay,
Okay.
so from the first day I invested, I used to look at PE ratios. I used to look at companies' fundamentals and all, but I didn't have that great idea on how to uh, you know uh, as any beginner. I also used to understand that buying at low PE is a value investing. So I did a lot of mistakes there, but then I understood the fact that you have to correlate the growth, correlate the performance of the company with the valuation. And that's how by doing my own researches I became more and more passionate about the companies and the stock market. Since I was working in the oil and gas sector, and the steel sector is very much connected with it, and oil and gas, marine, and steel and infrastructure construction companies. I'm basically a civil engineer. I did my structural engineering from IIT Madras. So from working in these sectors, I got to know how cyclical companies work, what are the common mistakes that people do while finding value in these companies, and how I can leverage this industry knowledge in my investing journey. So this is how I started investing.
Nice, nice. So actually, I also started like this. I also looked at market cycles, saw companies, sales cycles, sugars, and all going from like 10x in 2 years, and I got very, very excited about this. How to make this kind of money in such a short amount of time,
Yeah.
right? So I guess we all
So
start somewhere there.
yeah, the money in very small time you can make 4x 5x in cyclicals. The reason you have to understand is it offers you to buy at peak pessimism, and it offers you to sell at extreme euphorism. So this is why cycles keep creating value if you know how to play them. But if you do that in reverse, then they can be very harmful for one's portfolio also.
Absolutely. So it's
So
all about risk reward, I guess, right? Just a
yes,
function
yes,
of risk
exactly.
reward.
Yeah, and you have to understand the right metrics. You don't need to think that only PE investing is value investing, or any parameter like that.
Right. So we are gonna discuss all about this in our conversation today, right?
Hmm.
Yeah, cool. So let's
Excuse
start
me.
with what are market cycles?
So what I've understood so far in 9 years of my investing is every company and every sector is a cyclical sector. I keep emphasizing on this sentence again and again because uh, at every bull market, right now we are not in that high bull market, but every bull market, people keep saying that this sector, sometimes FMCG. In 2016, people were saying about Yes Bank. In 2015, people were talking about auto. That these are not cyclical companies. These are non-cyclical. They will not have effect of cyclicality of the market. And uh, they will talk to you about Potter's five rule of moat in the industry and all. So we need to emphasize on this again and again, because when the market understands about the cyclicality, there is a huge underperformance after that. So market works in cycles, and cycles happen due to the rotation of the liquidity. Liquidity always follows the value. The value can be in the form of growth, and it can be in the form of valuation. So money, that's how money rotates, and that's why value keeps coming from one sector to another, and another sector to third sector. So this is what I feel, that market, overall market is cyclical. And uh, some sectors that are not considered cyclicals, some people may say that FMCGs are not cyclical. I think they are as cyclical as it gets. So we understood this, and we created a formula, I mean mathematical model around it, and which in which we calculate the minimum intrinsic value and the maximum intrinsic value of company given the fundamentals. It can be book value, it can be earning per share, debt, cash, and we calculate. So the minimum intrinsic value of any company would be the price with which the stock will not go down, and the maximum intrinsic value will be the price from which the stock may not go up. So we basically created a band. So we our simple methodology is to buy at minimum intrinsic value and to sell at maximum intrinsic value. That gives us edge over behavior, because a lot of times when we are selling, there is a huge narrative of buying in those companies. A lot of times when we are buying, there is a huge narrative of negative news or selling of the company.
Right, right, right. Understood. So basically, cyclicals or market, have cycles because of liquidity, right? Like different liquidity cycles, as you said.
There are three types of cycle that superimpose each other and make a whole market cycle. So first
Okay.
cycle is economic cycle. As you can see, the economy of countries can go from boom to bust over 50 years of time, 50, 60 years of time, right? So if you look at the stock, if you look at the economic cycle of India also, it's been going on from last 20 years. It has grown with 6% GDP growth, 7% GDP growth. So it will continue to go on for 20, 30 years. So that's one cycle. Second cycle is business or sectoral cycle. So sectoral cycle is basically, it can be 3 years, 4 years, 7 years cycle, and it happens over the 7 year. It will face one boom and one bust. That can happen because of the regulator, which is the government actions. It can happen due to supply and demand. It can happen due to commodity prices. It can happen due to operational deficiency or operation excellence in the company. And the third cycle is, which is a very small cycle, that's a bull and bear phase in the market. So when these three, so at any given point of time, you must have seen, when the earning per share, cash, debt, everything remains same for 1 year, you look at the stock, it gives you minus 20% to plus 20%. So that is that small cycle I'm talking about. So when you superimpose these three cycles, you get the stock price. So,
Understood. Yeah.
so when you reverse engineer that stock price one, you get this three cycles, and that is how we calculate minimum intrinsic value and maximum intrinsic value.
Understood. So is it possible to time these cycles?
Hello.
Yeah, Nikhil. So I'm asking, is it possible to time these cycles?
See, I don't think it is possible to time these cycles. And value investing, the only con of value investing, I would say, is this only. You can create big money in value investing, cyclical investing, uh, but you cannot time these things. You may have to wait 6 months, 9 months, 12 months also to just get the cycle right. But uh, with okay amount of accuracy, you can get the bottom and the top. So that's a pro.
Understood, understood. So can you share some of your, experiences from the cycles that you may have, seen in the past or played in the past?
Yeah, in 2019, I think when we were seeing the news that auto companies, auto ancillary companies are closing their production shops, they had said to the government, whether you give us incentive or we will close down the production shops. We are going to fire a lot of employees. So that was basically the down cycle of auto and auto ancillaries. We bought GNXL that time at 144. We bought CM Industry. We bought Tata Motors and one, two more stocks. We also bought Atul Auto. So out of these four stocks, three worked very handsomely. Tata Motors gave us 8x, GNXL 7x, PM Industry we are still holding at 3x. Atul Auto did not give us good returns. We exited it at 30-40% return. We bought specialty chemicals around 2018. We specialty nearly at 59 rupees, and we exited at 350 rupees. Oh, sorry, we exited at 250 rupees. Right now it is 350. We played the same cycles in micro caps, which is GRM Overseas, Kawaka, and VR Films. In these we made very good money. But while investing in micro caps, we always take care that we put our allocation very less. So these are some of 10x and 20x also. And textile also we bought Arvind Limited and KKCL. We are still holding KKCL, and Arvind we sold it at 6x nearly.
Nice, nice. Must have made some good money, I guess.
Yeah, cyclicals you can make very good money, but there are losers also, like which I have not mentioned, like Gulf Oil. It is still 25% down, and
Right, right.
but I'm still holding them because I have conviction in the market. This.
Right. So, any thoughts on graphite kind of cycles or stocks? So we had earlier seen like graphite, going up like Heg and Graphite India going up like crazy, and then they crashed like anything, and no one knows now what the company does or where the company is. So these kind of wealth destruction are also there, right?
I think these are pure value bets. You should invest them looking at the value itself, and sometimes it takes time 4 years, 5 years. Sometimes it happens in 1 or 2 years only. But graphite last cycle, I think we made some money, but I think 2.5x, but we sold it very early. Apart from, but right now, graphite, I think the cycle is mostly over. It is above than for fair value and all. So we will not go into that.
So you bring an interesting point here. But, like valuing companies. So how do you value these kind of companies, or how do you value cyclicals like P ratio or replacement cost? What kind of methods do you use?
So we have our own inbuilt method of minimum and maximum intrinsic value, as I told you. We have a lot of fundamental parameters, out of which there are fundamental parameters we use to calculate minimum and maximum intrinsic value. That is cash, debt, earning, and uh, cash. So uh, from those we calculate kind of a band. You can say see, that this should be the minimum possible price of an asset that can go, and this is the maximum price that can go according to these fundamentals. So basically, if you think about it, you are taking care of growth, you are taking care of the quality while creating fund valuation of the company. So according to that, we buy when the stock comes at minimum intrinsic value, and we sell when the stock comes to maximum intrinsic value. But some of the investors, what they use is they use historical P by S and P by B also. So that can be used also.
Understood, understood. So, can you give us some basic parameters for the PE ratios or PB ratios? Like, people say that, 40 PE or something in a steel is, extremely kind of undervalued instead of being overvalued. So, your thoughts on that?
I think PE ratio are not relevant in cyclical investing. A lot of companies, I can see a lot of prominent investors with a very huge following right now, and they are talking some steel companies right now at PE of 3 or PE of 4, and it's a value buy. I don't think they are value buy because the P by E consists earning and price. And when the earning are exponent are very high, you cannot rely on PE ratio because this is the character of cycle. When the earnings drop, the P by E ratio will definitely shoot up, and it will show some 3 or 4. And when earnings go down, the P by E ratio will look like 40 or 50. But that 40 or 50 is the real place where you have to buy. And those 3 and 4 of PE is the real place where you have to sell. Getting my point?
Yes, yes, absolutely, I am. So, can you share like ideal PB ratio or anything like so that we can follow that too? So,
Uh,
anything
I,
that's easily available.
I think you can use historical PB,
Okay,
made in PB, or you can use the industrial PB. So
okay.
instead of going into what should be the PB 5 or 4 or 3 or 2, I don't think any PB or PS ratio can be seen in the silos. There should always be comparative study. So if the industry is growing at the fast rate, their whole PB system can be up. Their whole P by S can be up. And if the sector has been saturated, the P by B ratio of the whole sector can be down. If there is a company with huge niche, the PB can be up or P by S can be up. P by B can be 4 or 5 also. So I think the historical P by B will tell you more about the valuation. P by S will be telling you more about the valuation rather than P by E.
Understood. So, anything other than the ratios, do you track for commodities like commodity prices or demand supply or anything else? Do you track?
Yeah. So yeah, commodity price is okay, but see, whenever the commodity price fall down, also there can be a lot of companies which will be doing very good because of operational excellency or maybe the competitor advantage. So even if the commodity prices are going down, maybe some companies' market share will be rising. They will be earning high bucks rather than some other company. One company may have less debt and they may be doing better, and the other company has high debt, which they did during capex cycle, and now since the commodity prices are less, they may do poorly. So overall, companies' fundamentals should be chased. Overall, companies' fundamentals should be looked. So we have a ranking system. It's a very simple one. What we do is how we pick our stocks will be. I'll tell you. We go to out of favor sector. Let's say I have right now. I'm looking for pharmacy company. What I'll do, I'll look for all pharmacy companies. I will check their. So I will rank those companies on the basis of sales growth, on the basis of uh, ROCE, and on the basis of their P by B ratio. So I will rank them 1, 2, 3, 1, 2, 3, 1, 2, 3 in those three columns, and I will add those ranks and top three, top five companies. I will pick. I will do my due diligence, and I will buy those companies. So this is how I pick my companies. This is what my method is. So the concept behind this is, see, when the sector is not doing great, when the sector is in down cycle, you are buying a company not only which is increasing in the market share, but it is also providing good performance in the terms of ROCE, and it is also providing you very good valuation, which is P by B ratio. So this is what I call quality investing in its purest form. You know, when the sector is not doing well, your company is doing well. So when the sector does
Absolutely.
well,
Kind of relative strength, I guess, right? In between the fundamentally looking at the relative strength.
yeah, you can say that, yeah.
Cool, cool, got it.
So they are relatively more. They have relative strength in fundamental arena. You can say.
Right, right. That's a good way to look at these. So basically, we are finding the kind of best companies in the worst of times, right?
See, if I have to tell you that this mobile, let's say Apple people say that their mobile screen does not break. So what do we do at the introduction part of it? We just let it fall from 5 feet, right? So the the method to check quality is nothing but to let it go through extreme conditions. It is very easy to say when the stock price is already 2x, 3x, company has already performed, the sector has already performed. It's very easy to say this is a quality company. But the real quality comes from when the sector is in extreme pessimism and not doing well, and when your company is doing well. So, as you said, yes, relative strength.
Right, right, right. That's a nice perspective. So we had this chemical sector which was buzzing like last year, and a lot of people bought chemicals, and it was a favorite of everyone. So right, today it is kind of down 20 30% at an average. So how do you look at the chemical sector today? Is it a good opportunity, or avoid or sell, get out from there?
Uh, I think the most number of people get trapped uh, when the stock has already given 4x, 5x, 7x, and now it has corrected 20-30%. Because they think that the stock has already given 6, 7x, now it has corrected 20-30%. So they extrapolate the growth it is having, they extrapolate uh, the the stock returns, and they think that in next 4 5 years also I will get some 6x 7x. So this extrapolation is dangerous, and when the cycle turns, they don't turn for 6 months or 8 months, they turn for like big time, 2 3 years of underperformance you can see, because it's all about liquidity and smart money. So if smart money is pulled from those sectors and it is already put somewhere else, so it's not going to come out and you know again be invested in these.
Right, understood. So basically, kind of an avoid right now.
Yeah, yeah. It's that uh, as we said, risk reward is not in favor.
Right, right, right. So no China plus one, or all those stories that was going around there.
Those stories we will be hearing when the next chemical cycle comes out.
Absolutely, absolutely, yes.
Because
Right,
last sugar cycle also, if you see it, we were hearing the ethanol story. This sugar cycle also, next cycle also. is there.
right, right, right. So any of your experience where you might have got trapped into any of these cycles and lost some money or got some learnings. Any
Uh,
experience would you like to share? Yeah.
yes. So I invested in. I will not call it trapped, but I invested in this Castrol India in Gulf some 1.5 years back. They are down by 25-30%, but I'm still holding because easy narrative is going on right now, and it's okay. So the it's creating more and more value for every price. So I'll be averaging down those stocks. One more stock I bought was KKCL in the textile. So even though the textile cycle has done wonderfully, this stock has not done very well because the it sells jeans, and a lot of work from home is going on, so their sales is not that great.
Right,
So
right.
still,
On
yeah,
Gulf India, Gulf oil lubricants, I can see it's down quite a bit, and there are only red candles. Like, when
yes,
do you plan to get out from them?
I do not plan to get out.
So,
I'm going to play this cycle, lubricant cycle, or if it takes 3 years, 4 years, I bought 1 year back at nearly 580 or something,
Okay.
and the
So
company has just announced a buyback also at 600. So it's
okay, so let me phrase my question like this. On what on what event or upon what happening would you consider that my thesis is wrong and I have to exit this investment, or this isn't working?
uh, so we I have a mostly three red flags. One of the red flag is the promoter pledging, and
Okay,
second is when other income exceeds 10%, 20% of the sales.
total income, yeah.
Yeah, and sometimes when I see regular interest coverage ratio default, like company is not able to pay its interest for like 7 8 quarters. So
Understood. But
some of the
that is company specific. But anything related to sector specific, where based on that events, you consider that your sectoral whatever you thought the thesis that is not working, and maybe your research was wrong or it didn't work out.
sector wise, if a sector is going to I mean, it's if it's going to be obliviate, like the sector is not going to exist in next 10 years. But if the sector is not going to exist in next 10 years, I will not even invest
Okay.
in the very first place. So I think, and even the sector is reducing, the market leaders always make keep making money and keep gaining shares, because the smaller players keep getting out.
Okay.
So in that case also you can make good money.
Understood. Understood. So any such traps present in the market right now? Are you looking at any traps which might be there?
I would not call them traps, but the risk reward is definitely not in favor. I would say first is steel. We talked about steel. Second is IT and specialty chemicals. So these three, four sectors, they have seen good run. And FMCG, I am talking about FMCG from last 1 year also. They the run up they have seen is huge, and it may seem underperformance for next 4 5 years. So they have a different kind of cycle. They don't go up and then correct, then they go up. They the stocks how they perform is they go up and then they consolidate for 4 5 years, 6 years. They don't give any return. Then they come to X 3X. So that kind of underperformance, that consolidation they may face in
Time correction, right? Basically, time correction, a long time
uh,
correction.
yes, yes, yes.
Understood. Understood. Okay. So, any thoughts on FMCG? Is FMCG cyclical?
Hello.
Yeah, yeah. So, is FMCG cyclical? Any thoughts on that? Because it's a very controversial question that we see. People say, some say FMCG is a very secular trend. Some say FMCG is very cyclical. How do you look at it? Your take on this?
I think every sector is cyclical, and it's just that about of it's just about time frame. Sometimes the cycles come in 2 years, 3 years. Sometimes cycle comes in 7 8 years, and sometimes they come in 15 years. Because if you look at every business, they are selling some product or some derivative of either agricultural product or commodity product, right? There is no business which is selling other than that, or not affected by than that. And both of them are cyclical. Agricultural products are cyclical, commodity products are cyclical. And uh, FMCG is very affected by that also. But it's all about the timing. As I tell you,
Nikhil, your voice is breaking up. Can you please repeat again?
so I was telling you that, as I told you, that they have a very different kind of cycle. That cycle is, see, uh, one type of company is when where the fundamentals go up, earnings, or you can say book value, they go up, they go down, and the stock also follows the same. Second type of company is where the fundamentals go up, they consolidate, they go up, they consolidate. In this case, the stock price go up, it consolidates a little compared to the first one, and then it goes up again. And there are third kind of cycle in which the FMCG company comes, where the fundamentals keep going up, but the stock price will go up. It will consolidate for 5 or 4 5 years, and then it will go up. So they become multi-bagger over the 8 years, 9 years, but for 5 6 years they can consolidate very much.
Sorry, I didn't catch the last line. Can you please repeat that?
So I'm saying that they can underperform for 5 6 7 years also. So they have a different kind of cycle. They can consolidate. So time correction they can go through.
Okay, but isn't how secular cycles work, right? It's a characteristic of a secular cycle, isn't it?
I didn't understand what.
So, cyclical cycle, in a secular stories, the stock will go up, then will move into consolidation, then will go back up again. This is how a secular cycle looks like. But in a cyclicals, the stock will go up, will come down, then will go up back again, right?
So the consolidation is nothing but the time correction, right?
Yeah, 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 exactly, exactly, yes,
Yeah. So I consider that as a different kind of cycle. That's it.
right. Cool, cool, cool. So, any cycles that you are capitalizing on right now, you have in your portfolio, or you are looking at something that looks good to you on risk reward basis?
Yeah. So right now we are working on engineering companies. I think there's a huge value there. Second is pharma companies, auto ancillaries, and one of the textile company also we talked about, AKCL, construction companies, and public banks. We invested, but it has not gone up that much, but we'll continue to hold, and tobacco companies. I think these 5 6 sectors still have value, and the sectoral rotation may happen. I think the cycle has already been turning around these. We can say uh, the liquidity is moving from FMCG or other secular stories from these companies, and I think the value will be created around them next 2 years, 3 years.
Right. So, let me ask this again, plain and simply. You are bullish on ITC, right?
Actually, I have VST.
Sorry, I didn't get you. You have
I have VST.
okay, VST. Okay, okay, okay. So you don't have ITC, you have VST.
Now there's too much this around the ITC. So, so I don't go in the companies that everyone is talking about. I don't know, maybe. Uh,
Right, right. Everyone seems to be invested in ITC, and the price isn't going anywhere. Like it's a big deal now.
so I have a
Like
theory that if everyone is bullish over it and still the stock price is not moving, then there is something we don't know, and that's why we should stay away maybe. So I have invested in VST, but I had invested in ITC, but we exited last year.
cool, 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 cool. Uh, so you are also bullish on pharma and IT engineering, all these stuff, right? So you think pharma can again rise back up, like rising from the ashes kind of thing, because it is down quite a bit.
Yeah, I think the prices, if you look at, uh, they are 2014 prices. Alembic Pharma, this Cadila, and all. Every stock they are trading at 2014, 2015 valuation. Actually, valuation wise, even before. Um, so they have gone through a huge time correction, and
Okay,
I think the value is coming in those sectors. And if you look at growth and performance wise, they are still doing great,
but
and they
don't
have
you think don't you think the growth will taper down after this COVID thing is off? Like now the COVID demand is off, so don't you think the growth will taper down a bit?
I don't think so. I mean, the demand will always be there.
Absolutely, yes.
COVID did not create demand. What it did, in fact, COVID had an adverse effect on pharmacy because a lot of medicines, surgical instruments, and surgical medicines they got expired. One of my uh, one of my school friend works in pharma industry. He was telling me due to corona, only corona related medicines are getting sold and others are all getting expired, and the companies are having huge loss because
Okay,
of the corona.
that's a new perspective. So we'll take questions now. If you are up for that, Nikhil.
Yeah, yeah, sure.
Cool, cool, cool. So let's invite some audience and get their questions. So I have Arun here. Arun, you can ask your question. Mm. So added Arun. I have added Gulapalli Srinivas. You can ask a question, sir. Okay, I've added Abhinav, who's a equity analyst.
Yeah, this is Srinivas Kullapalli.
Yeah, yeah, sir. You can ask your question.
Hi everybody. I have one
Yeah.
question. The speaker is saying about GOCL, and another more stock is Castrol. See, both of these companies. Both of these companies are into lubricants, automobile lubricants, majorly. So when it comes to the automobile lubricants, more of the automobile lubricants are consumed during the engine engine movements, like piston movements and etc. So when we are going for a EV story, future is going to be EV story. In such a case, what is the outlook of this company? GOCL, of course, it has diversified into real estate, and it has got some level of what do you call it, detonators business and etc., which is not doing very well compared to premier explosives. And the real estate also, it has got a parcel of land. Only it is developing that land. That too, it has got only lease for around 99 years. GOCL. Coming to the Castrol, it is not a diversified business again. It is only a pure automobile lubricants business. When automobile lubricants are moving from engineering parts to electrical vehicles, what is the growth perspective for these companies? Why you are still invested in these companies? This is all the question. I'm muting.
Hmm. As I told you that cyclical investing works, and it gives you opportunity to make huge money over time, is because you buy at peak pessimism and you sell at extreme euphorism. So everyone is talking about EV right now, and there's a huge pessimism around lubricant stock. So that is creating a huge margin of safety in the lubricant company. Second, uh, the EV story, as it is building up, it is preceding its expectation itself. Whatever EV is going to come, it's already priced in. Right now, people are talking about EV opportunities. Last year, people were all about EV. Now they are talking about EV, ethanol, hydrogen, and other resources. In upcoming years, 1 or 2 years, they will be talking about the problems and the infra problems that are EV facing. So it's all narrative. I think the lubricant company will continue to do better. They are already doing better. There is a huge growth and a peak pessimism in lubricant companies. It is still providing value, and in next 3 years, you can see good multi-baggers coming out of them.
Cool, cool, cool. Thanks. Hope that answers your question, Srinivas.
It answers, but somehow I'm not still somewhat convinced about this oil lubricants business, except for industrial lubricants. I don't think automobile engineering side, automobile parts using more and more oil. I'm not sure about it, but maybe what he told about the EV story. Coming to the EV story is another more case, something like how do they manage the
I'll give you an
how
example.
do,
I'll give you an example. When last year, when I talked to people about paper stocks, and I told them that paper, there's a huge value. to buy a paper stocks, and people were telling me, "Arey, what is this? Who buys paper? Everything has become digital. We are using mails right now. Nobody uses letter. The whole offices have gone paper free." And so they were looking at it from the Xerox places. But now since the paper story has worked, it has worked somehow, but it has still to work a lot. Then people will start talking about paper packaging. And that is how packaging industry is going from the polyfilms to paper. So the new perspective in market keep coming. And the thing is, when these narratives unfold, then we understand, okay, this was also the use of paper. So the same thing is happening right now in lubricants. Gulf Oil has also done some tie-ups with EV companies also, just like Exide has also done. But I think their conservative business will continue to do very well. And I am buying. I have bought Exide also, and I have bought them for auto ancillaries, not for EV, just like Gulf Oil.
Right, right. So, Nikhil, let's move to another question also because we are a little bit short on time today.
Okay.
So we can take yeah, see Daga or Abhinav or Khader, anyone of you can speak.
Yeah, hi Ashutosh.
Yeah, hi.
So actually, sorry, just reverting back to the previous question.
Sure.
So for example, like how Ashutosh pointed out, like a chart of Gulf oil, it has a lot of these negative red candles. So what gives you the conviction to, yet hold on to say a loss-making position if you were to enter? Just generally speaking, yeah.
But we don't look at the technical. We only look at the fundamental. So when we find value according to the fundamentals of the company, we go in. We don't look at the candle. We bought Tata Motors when it was nearly 80 rupees in November 2019. You look at the candles there, and you'll find that people were saying that it's a falling knife. What are you doing there? And there was a lot of story about Jaguar. There are a lot of story about wrong acquisitions and how Tata's story is over. But we found value. We bought it, and now it's 8x.
Okay. So do you benchmark your performance against any say indices or any other metric?
Yes, indices we do. Sometimes I have given one presentation on eLearn also where we have shown the our performance against the hot stock of that time also. So one of the stock was very famous last year was Lotus Lab, and against that our performance, our one of our best stock had given 12x and 13x in the same period of time.
Okay. Okay. Thanks.
Yeah. So let's take the last few questions. Andy,
Yes, Nikhil. Good evening. Nikhil,
yeah,
Good
good.
evening.
pharma is a big sector. Which part of pharma you are keen on?
Excuse me.
Pharma is a big sector. Which part of the pharma value chain you are looking now as a value buy?
I think the whole pharma is undervalued right now, but the domestic part is more undervalued. Some of the names I have already given, like Zydus, Alembic, these three, four companies are the best ranking companies according to a ranking system. So these are the companies we'll be focusing on. You're just
Uh,
studying them
just
right now.
just interrupting, Nikhil here. Any stock that we are talking about is just for educational purposes and discussion purposes. It's no way any recommendation or buy recommendation or anything of that sort. So please don't buy based on this or do your own research. Okay.
Yes.
Exactly. We are
Yes, Nikhil.
also studying that. We have not made positions.
Right, right. And Nikhil, yeah, Nikhil is invested,
Yes.
so he has a position there.
Nikhil, what about APIs and CDMOs, which is corrected quite a lot?
Sir, it has corrected, but it has corrected from the top. As I was telling him that the most of amount of traps you will find in the companies when the stock has given 6x 7x in the last years and it has corrected 20-30%.
Okay.
So that is where you find most the trust. So the real cyclical investing will be that it has corrected for 6-7 years, it has found its value, and it is at peak pessimism, then you buy.
Got it. Thank you. Thank you.
Okay, thank you.
Yeah, thanks. So we have Khader. Yeah, Khader, you can go.
Good evening. The question is to Nikhil. Am I audible?
Yeah, yeah.
Yes, yes, you are. Yeah.
See, I am more interested on engineering companies. The engineering also is got a huge coverage. You have welding electrodes, EPC, bearing, refractory, and auto ancillaries. Which is the engineering sector you feel has got a good tailwind for next 3-4 years?
I think right now engineering and construction, those companies have good value, and there are some companies which are in hydrocarbon business, oil and gas sector, and steelworks companies. So some of those companies have great value, right?
Uh, can you name few? If it's a small cap or something like that.
I will tell you how in what we have done our investment. One is GEPIL, second is PSP project, and I think L&T is doing quite well, but L&T has already performed. So these are some of the invested we have invested. You can do your due diligence.
Yeah, see, I was tracking the refractory industries, Orient Refractories or RHA Refractories now, renamed. You have any idea about that particular company? Because it's run up a lot, as you said, 3x or 4x last 1 year kind of thing. So I'm
Uh,
just
I don't have any idea
okay.
about that.
Thank you, thank you.
Okay, thank you.
Thanks. So we have the last question from Gajendra Rathod. You can move ahead with the question.
Yeah, hi. Thanks, Ashutosh. Nikhil, wanted to know, this is not about stocks. It's more on personal basis. So at what rate have you been able to compound your capital so far since you started?
Sir, I started 9 years back. I didn't know anything. My last 9 years CAGR would be near 13-14%.
Okay.
Last 4 years CAGR is 30.45%. We came up with this minimum and maximum intrinsic value 4 years back. After that, our CAGR is 30.2 or 3 something.
Okay. So now my next question is, when you invest, when you are investing your money, but like you said, Castrol, so you bought it at maybe a certain price. Now,
Yes.
say you said it has moved down from there as well. So,
Uh,
do you have reserve capitals for that? Do you keep going investing like it's a SIP format, or it is just lump sums all the time?
it is lump sum,
Okay.
but as the market rotates, then you keep getting cashes, right? Like we got cash, a lot of cash in November 2021 when
Okay.
we exited GNXL, Tata Power, and all. So we
Okay.
got a lot of cash. We had that cash, so we invested more in Gulf and GEPIL in this correction. We are still keeping the cash, or if we get some value in pharma companies or some companies.
So no, I'm talking a specific case. So, like Castrol, where you would say you invested X amount, and then since you have been investing, because अगर 21 रुपए पे अच्छा है तो 15 पे तो शानदार है.
But we invested at 109 rupees. It
Okay.
never given. It has never gone below that.
Okay.
But in Gulf Oil, it has gone.
Okay.
So it's okay. What we follow is a portfolio approach. So we invest 3% in each and every company.
Okay.
So so if it goes below 25% and the fundamentals remain intact, we invest 2% more.
So,
So basically,
like अभी आपने बोला कि आपके पास में capital free होता है. So
uh,
you keep investing, and now you're saying 2% more is like, are you deciding on that investment amount from the day one? How does that work?
that's I'll tell you how it works. When we start investing, let's say we start investing today,
Okay.
and after 1 year, I know that there's some cash coming.
Okay.
So the total portfolio amount will be what I have today plus what is going to come in next 1 year.
Acha.
Whatever I invest 3%, I will invest according to that, because I will be making my portfolio over the year.
Hmm.
So I will be investing 3% according to that amount.
अब मेरे
So
पास
as the
मेरे
opportunities will come over the years, I will keep getting cash also. So at the same time, I'll have cash, I'll have the opportunity. That's it.
मेरे पास तीसरा क्वेश्चन था, मैं भूल गया. So
Hope
thank
that
you.
yeah, thanks, sir. We have to wind it up at 8, so I'll just take his closing
Thanks,
remarks.
thanks a lot.
Okay, okay.
Thanks, yeah. Thanks for your questions, yeah. So, Nikhil,
Yeah, Ashutosh.
yes. So, thanks for this amazing space and discussing your intrinsic value. For theory and how you buy and you sell your stocks. So, any closing remarks before we wind this up?
Uh, so I would say that, as I have already said, that all the sectors are cyclical, and please do not invest at overvaluation. Do not buy at the top, and look for the opportunities that are providing you value. Uh, Actually, it's a one question I got, and it was a very interesting question from someone, that he this one stock. I told him one stock. He said that from last 6 years, 7 years, it has been correcting, and you are telling me that in next 2 years it will become multi-bagger. How so? So this kind of doubt can come when you are tracking the price. If you, instead of that, if you keep tracking the value, you will understand how market cycles work, how value works. So I would say keep tracking the value of the market, value of the company, and also keep diversifying. A lot of times, everything is right, but some bad promoter thing happens, and uh, the company's stock just destroys your wealth. So keep diversifying, and keep buying value at the right prices. That would be my final remark. Yeah.
Cool. Makes a lot of sense. Thanks a lot, Nikhil, for coming to our space today and sharing your thought process and how you frame your trading, investing about around it. So thanks a lot. Thanks everyone for joining in and listening to our conversation. So yeah, Nikhil,
Thank
bye.
you. Thank you. Thanks
Yeah,
a lot, Ashutosh. It was a
yeah,
nice discussion.
yeah. Thanks everyone. Yeah, bye. See you again another day. Yeah, bye.
Thank you. Thank you. Bye.